One of the hardest parts about trading a bullish stock is knowing what a pullback actually means. Is price simply pulling back towards support, or is the trend actually starting to turn bearish? So in this video, we're going to work through some real charts in TradingView Replay to see how we make that distinction using market structure first, and then tools like moving averages, the Ichimoku Cloud, and some fibs. So let's get right into it. We had Grok choose a random stock for us. We are on the weekly chart. So let's jump to the daily chart. And we're going to hit the replay function in TradingView. We'll go down to random bar and we'll take all the tools off. And we will just sort of analyze this market structure wise. And then maybe we can layer in a few tools and we can even potentially put on a fib as well. So we're in 2023, so that's pretty good. A little bit further back, we may not necessarily know exactly what's going to happen in the present time. So this kind of looks good. So, if we're looking at this right here in terms of just market structure, then what we are forming here is potentially a low, and maybe this is a lower low. I find that sometimes with random bars in TradingView, they kind of give you like the lower low, but we'll see how this plays out. If we do like a little bit of labeling, we maybe don't need to do a ton of labeling right here, but we're kind of forming a lower low. If we looked into this range back here, this would have been the lows. And then these two bearish days here started closing below a prior low. So right around there, these two bearish days indicate that we have a break of structure to the downside and we're going to continue to go lower. So you never want to consider an entry until we make a lower low, then we make a higher low, and we maybe get above some possible indicators. So we can play this out. I'll just put it on quite fast speed so we can see more examples. So as we come down, so we're continuing to go lower here. We don't ever want to consider any buys on this stock. And what we're doing on the daily chart, you can sort of think of doing this on a higher time frame as well if you don't want to look at the market on a more active basis. The same concepts apply on the weekly. They just take longer to sort of play out, and support tends to hold a little bit better on the higher time frames. So if we kind of play this out, we can see that we're starting to potentially form a higher low now. So if we brought this down and we just called that the lower low, we came down into this low and we sort of started to try to form a lower high. So if we kind of just look back at these candles, we've got a lower high, potentially a lower high, and now a lower high here. As we're watching this, we don't want to close candles below this wick because that's going to be a break of structure to the downside and sort of trend continuation. Ideally, eventually we want to make a higher low and we want to start closing some candles above maybe what we've labeled here as sort of these lower highs. We want to change a character. We want to start closing candles above a prior high in this downtrend. So the character changes from bearish to bullish. So we can see what happens here. Okay, we had this on quite high speed, but as we started to close these candles right here above this high, maybe we'll slow it down a little bit. There is what we would label as a change of character. So those are warning signs that our market character is no longer lower lows and lower highs. We've had a change of character. We started to close candles above, a lower high. Now we haven't labeled this like perfectly, but that would be a lower low. Now we could label that a lower high, and then we sort of made, a bit of a lower low a higher low in this area. Sometimes, things aren't so perfect, but this is a good sign. It's clearly a good sign. And then what we can do,
Tyler,
yeah.
Which tool did you use to draw that line?
It would just be the horizontal line. So It would be under right there.
Okay.
The second column or the second box. If you star these, then you'll keep them in your toolbar.
Perfect.
So naturally, usually what's going to happen, not always, but we're going to come up to some sort of resistance here. And if you weren't able to sort of buy this change of character, because it's not always the easiest thing to do, it's a little bit more on the risk side potentially, then we want to wait for maybe some resistance to get hit. And when we pull into another higher low, and maybe there's some tools and confluence in that particular zone. So we can kind of zoom out here if we wanted to and see if we can put on maybe a fib retracement if one would work. It's still sort of early days, but you can maybe put a swing high to a swing low right here and potentially use that fib as some resistance maybe. And that might be like the actual fib from inception here. So we can put one on this early and we can kind of just have it as another tool for confluence and just to potentially be warned about that. So it looks like we've made a low. If we kind of roll over and we start getting more bearish, then it might not be the greatest fib to use. But why don't we just put it on to test, and we can take our high to our low and we'll just lock that in. And basically what we've attempted to do there is put on a fib, a swing high to a swing low. We don't have a lot of data with the price action in terms of how well it's going to respect this fib. So I would be a little cautious in how much conviction you have in this particular fib, because if we kind of roll over, then there's going to be another low where this swing high to swing low might not be that useful. But just for argument, just for kind of examples, why don't we kind of put that in and just kind of see what happens. So let's switch back to the daily, and we can maybe just be cautious in that area. Okay. So we're there. We've had a change of character. Things look good. We might not want to buy until we get a higher low, until we get some confluence of support. Now we can maybe layer in our other tools as well. So we have closed back above the 50-day moving average. That's always a good sign. We're starting to slope upward. That's generally a good sign too. Probably going to hit some resistance here, but maybe as we retrace lower, we get closer to this flattening out, and we maybe even get inside the daily cloud, we can potentially find maybe some support. And it's still early days in this change of character, so you might want to be a bit cautious in these examples. So let's hit play and see what happens. Okay, so we gapped up right here to this fib. We closed below, we closed 1 day below, and it's been resistance on this particular day. We'll just play this out a little bit more. And yep, so right away, this fib is looking like it's acting as resistance. We've come back down into a better zone. And now we're kind of coming back down into a daily zone that might be looking better in terms of support. In terms of market structure, we still probably won't get really bearish until we close below this lower low in here. So we'll play this out and see what happens. Okay, so we've come down to the 50-day moving average. We lost it for a couple of days, but regained it. And now the 50 days crossed the 100. And maybe we can put on the cloud as well. And depending on where we are, we might have gotten into the cloud. We're back testing the cloud. I don't want to clutter up the chart too much for kind of learning purposes, but maybe we can just put it on for argument's sake. Yeah, so we got into the cloud, broke above it, and then we've come back towards it. So usually this is like a good sign. When you look at this on a weekly chart, generally coming back to the cloud, back to the averages, it's usually a better sign. We don't want to buy when things get extended near resistance. We would rather be more bullish when we kind of get closer to these indicators and support. So invalidation is still down here, and we're looking better, getting closer to this support zone here, and maybe we can break out again out of the cloud. We'll have some resistance here. We'll have some resistance with these highs, and depending on the last high that we had for this last break of structure, we may have already kind of passed it in terms of an official change of character, but we're looking better. So we had a change of character. We got above some indicators. We ran into resistance, as always happens. The ebb and flows of the market. We're not just going to go up in a straight line. We've broken out, and then we've got back towards the cloud. Generally, these are sort of better buying zones to consider. And again, our invalidation is going to be still down here. Potentially now we can move this up as well. So we can unlock that. Oh, let me just move this. Okay. So if we are trading on the daily, then we'll have potentially tighter invalidation. So if we want to do our marking a little bit better, we've had a higher high here, and now this is looking like it's forming the new higher low. So we probably don't want to start closing candles below this low, because that would be a change of character on the daily chart, maybe a warning sign that we might get a little bit bearish. So that would be the low that we'd want to stay above for this particular market structure. And we can kind of play this out and see what happens. And we're getting close to resistance here. Okay, so we spent a couple days under that fib level, but we've broken out. We've had a break of structure above there. We still haven't closed above this candle. And now we're getting closer to another sort of resistance point. So here's kind of better support. Now we're kind of getting extended to the 200-day moving average. It's still downward sloping. We might have to break into resistance and do some sort of back test on the cloud again, so we can kind of see what happens. Okay, so that didn't happen. We've gapped up again. Oh, there's earnings right here. So maybe there was good earnings where we've gapped up to the next fib level, spent a couple days there. And again, we're now, if we kind of look at where we've broken out from earnings. We're above this particular fib. The moving averages are starting to look better. Things are starting to look better, but we're sort of overextended from this daily chart. Let's see if we can kind of come back into this particular zone. That would be something to consider. And we're getting closer. So things have gotten really much better and bullish. We never came back to the daily cloud. And we start closing candles above a high. So we've got a break of structure to the upside here, and indicating sort of good trend continuation. So this is like an exercise that you can do, and you can kind of just do this on a bunch of charts and just see the pattern that some of these stocks sort of exhibit. Again, when we break out near resistance, we want to be more cautious. We want to be more bullish down here near support. This was really your best entry. Always want to be cautious around resistance, around the moving averages. Earnings kind of shot us back up here. And now we potentially can watch how things develop. Here, we're approaching a fib level of resistance at 32.50. We'd want to be cautious here. Support is going to be much better around the 26 area if we get back to that zone with the moving averages, with the cloud, and so on. And then if we wanted to kind of keep our invalidation in terms of market structure, then we can kind of raise this up to that low there. And that would be something to consider for maybe if you're trading shorter term. That might be an invalidation level. If we lose the cloud, we lose the 100-day moving average, and we lose market structure here, that could be a sign that we might be a bit more bearish and need to come down to further sort of levels. So we can kind of just play this out. Okay. So we are continuing to be really bullish. We sort of just keep breaking up and things get, okay. So here's another example where the fibs are acting as resistance. This fib, we just blasted right through, I guess, another earnings call. This fib, we're at resistance. We want to be cautious. Getting closer to the moving averages, closer to the cloud, is going to be a better zone of support. So at 11, this might get really just bullish and continue to, not have to touch the cloud. We can see we make break of structures, good market structure. We're continuing to go higher, and we have a lot of momentum. We don't want to buy towards resistance. We'd rather buy closer to support. And this might be an example where when things get bullish, we don't always go back to the 50-day, the 50 period moving average, the cloud. We're just continuing to be really bullish in these areas. Generally, the strategy would just call us to be cautious when we're approaching these fib levels, be more bullish around the cloud, around the 50-week moving average. So this is looking like we have momentum. If we can break this fib level, then we can sort of keep going to the next one. So let's just run this out for a little bit. So there we get consolidation after a big breakout, closer to the moving averages, better zone in general. Okay, so after big breakout, we're consolidating. The 100 week is getting closer. The 100-day, or excuse me, the 50-day is starting to slope downwards a little bit now. So If we continue to lose the 50-day, it might mean we need to come down to the other averages. This fib level is clearly resistance. So if we can't break resistance, we need to go lower to some more support. We can kind of just see, okay, so the 50-day is continuing to be resistance, and now we lose the 100-day as well. So this could be a call for just a bit of a consolidation after a big, massive move up. We kind of put things in perspective, how much we've gone up over the last 6 months or so, from 16 up to 43. So a big run up into a fib. We consolidate, we start losing some of the moving averages. It may be in store for a deeper backtest or some consolidation in this particular zone. And then we can just hit play. So we don't make a lower low here, so that is a good sign. We don't continue to break candles below that low. We make a higher low. We're still challenging this 618 on the daily. We really want to break above that for continuation. And our higher low is going to move up here in terms of market structure. Okay, so now we close candles above the previous high. We've got a break of structure. We close candles above everything now, and we're closing above a fib. Now we are looking better, more bullish. We've sort of back tested that fib. So we'll see if we need to do another back test or if we have a green light to go to the next fib extension. So this is, a good sort of example of a huge breakout into this fib. And we sort of consolidated for September 23 to Jan 24. So 4 or 5 months, couldn't break it. And we noticed that on the daily, we have this low here. So we sort of made a change of character on the daily, but we don't have continuation. We never continued our break of structure. We made a low and then a higher low. Good market structure as we sort of consolidate. And now we finally break above there. So we'd want to kind of keep this 618 as support in order to continue higher. That's a good daily close candle. We can play this out and see if we can maintain this and sort of keep going higher. That would be bullish. And there we go. Yeah. So there's another good example. We made a break of structure. We had a breakout. We back tested the daily cloud with this right here. So break of structure, back tested the cloud. Those are good bullish signs. And then we made another break of structure to the upside. And we got another earnings report that blasted us off to the next fib level and so on. So we can kind of just keep going. And as long as we maintain good market structure on the daily, then we can just watch these fib levels and be cautious around those fib extensions, be more bullish around the cloud, around the support levels. And we can kind of just, why don't we play this out one more time? And as we make a low, we're going to make a higher low somewhere. We just don't want to make generally a lower low and a lower low and break of structures to the downside. And that could just mean that we want to do a bigger pullback. But the stock looks like it's had momentum, consolidated, it's gone higher. The next fib is up there. We can kind of just play this out, see what happens. And we are just continuing to be bullish. Continue playing this out. Okay, so now we're getting, again, big breakout closer to the cloud. This is a better zone. We're making a higher low. Play this out up to the next fib level. So we had a break of structure there. We want to be cautious a little bit at resistance. Okay, better zone here, higher low as well. So there's our higher low from before. So if we kind of lose the cloud, lose this level, then that could be called for a deeper retrace, and that we're at resistance at that fib. See if we can break it. Okay, so here's a good example as well. We came down and we closed some candles below these lower lows. We actually came all the way down and needed to touch the 200-day moving average. So the low there, 60, 67. We reacted well and we kept going. So we can see if we can challenge this resistance above and not continue to make a lower low right here. There's a resistance again, and we are bullish again. So sometimes we can see this daily chart we made a lower low, but it was one day where we come down to support. So sometimes you can have a change of character on the chart and there could be support down there. It could be a 200-week moving average. It could be a 200-day moving average, like in this case. And that basically, a change of character is not always an automatic sign that the trend is going to change. We want to watch how the next few candles develop, especially for daily charts, the lower time frames. They can be a bit more noisy, and a one candle close below is not a full confirmation. So here, we closed, then we had support. But if we started to lose this 200-week moving average, and then we made a lower high, and then we made a break of structure to the downside below, then those are more confirmations after the change of warning sign in the change of character. So if we were keeping up to speed a little bit more thoroughly, then we could have called, that wick the low, where we closed down here for a few days, reached the 200-day moving average, and then sort of recovered. So a daily change of character without further confirmation, it's a warning sign, but it's not an automatic trend change. As we can see, this stock is just having another earnings, it's just bullish. It's been bullish. And I think APP, I think it just keeps going up. So we can maybe switch and try a different stock, because I think this one just continues to be really, really bullish. But we can kind of see that, we talked about layering in some fibs. If we just take everything out, then this is maybe a pretty good example of how stocks respect the fibs. If we change to a weekly, we can maybe view it a little bit more, right? We've got resistance at the 618, and then we continued higher. We got resistance at the 886. Generally, stocks just don't blast through this 886 the first time. This stock gets really bullish, so it moves through the 702, 786, but here is, resistance. And then as we break into a previous high, we're generally going to not break through the first time. I've looked at this chart before, so I know we get really bullish here, but I can't remember if we just blast through this. Generally, what you'll see is you come into the 886, it's resistance. You don't always just break through the first time. And sometimes this previous high, it should be an area to be cautious of, because you generally don't break through this. We'll see how this plays out, but we want to be cautious and kind of wait for confirmation. So let's just kind of play this out, and we'll see if we do get it really, really bullish. I think so this one at APB is just a really bullish stock. But for the most part, in general, this is like an area to be a bit cautious about in that level. And then this just continues to go higher, and I think we might get up to the 618. This is always an important log scale fib where things don't always break above. This might take a little bit of time. Just 10. Yeah, so we got close to that extension and then needed to come back to these fibs. We can just kind of see through these fibs how we play out here. And we're up above for a couple weeks, and then we kind of lose that fib. So sometimes this log scale fib that you'll notice, it was important for Palantir as well. It can be quite a powerful fib. Sometimes we can spend a couple months above it, but when we lose it, then sometimes it's a sign for continuing lower. The 1.618, whenever you draw that fib, it's generally quite an important log scale fib. It's either resistance for some time. Generally, some stocks just don't kind of melt right through it. It's quite a big resistance sort of zone. So hopefully that was useful running through that. This stock's been really bullish. We can maybe try an example of another random stock. Yeah, so there we are kind of at the end of where we are right now in the present time, and run through that example again with maybe a different stock as well, unless there's any specific kind of questions that came up. I don't know if any. No.
Tyler, at what point would you create a new fib based on the more current trends, right? On this one, you started in the downtrend, but at what point do you start over?
Yeah, that's a good point, or a good question. This one is still valid because we are not through the full fib extension. So this swing high to swing low, based on the bear market, these fibs for a lot of stocks are still important. This 618 is going to be big resistance if APP gets back up there. And right now, this fib is important as well. So you can draw a more recent fib in time, but this one for this particular stock is going to be still valid. As we get potentially into these more extensions, there may be an opportunity to draw a more recent fib to give us some confluence or give us some other tools between these two fibs. We've got 580 to 2900. There's a huge range there with no possible fib extensions. A more recent fib is probably going to help with some confluence in that area. So just looking at this stock in terms of another swing high to swing low, could potentially do a swing high to swing low in this area right here. So we could also draw one from these highs to this low. And we'll just make sure we're zoomed in here. Okay, so we can lock that in. And although we don't have as much price action to help with this particular one, and the swing high to swing low isn't as large, it's still a fib that can be useful. And this particular one, we've got an extension at 952, the 618 there. So that is how you can basically have another one that can be helpful once that other one, we've got quite a big gap in between the extension. So we've got a 1700 fib that could be something to be careful with or cautious with, whereas the other one, we had that big sort of gap. So not all stocks are going to offer, a really nice swing high to swing low or an obvious one. We've taken this one and we can kind of try to zoom in to see how well the stock is interacting with this particular fib. So, we've got resistance there, support here. Clearly, we had resistance at the 680 level. We had support here and then we lost it. Came down to these levels. Can be helpful sometimes with these shorter fibs. The fibs are clustered a little bit together, but you can still use this with some other tools because the stock is sort of interacting with it. Generally, the more major fibs tend to offer a bit more of a reliable zone, but this would be certainly one to watch if you had nothing else on your charts in between sort of those other fibs.
Sure.
So Caterpillar is actually a good example to explain that a little bit better. If we kind of look back on this particular chart, Caterpillar, we've gone from the bear market in 22, and we can see Caterpillar has hit this full extension at 4.236 right there. So this fib is basically in the future. This fib is run out. This is the full cycle of this particular fib. So over time, you won't be able to use this one once we flip 989 to support and we continue higher. And that is where some of the more recent fibs will be needed. So you can kind of ignore that one and then put a more recent fib on, which is this particular one. So November to April 25. And here you can see that at the moment, the Caterpillar is right up against this particular fib. And now you've got some further extensions above. Okay.
Got it. That's helpful.
Yeah. I've got a very major fib written. Okay. So this one is taken, even further back. So we've got one from January 18th. So there's nothing wrong with, there's no right or wrong way to do the swing highs to swing lows. This is a swing high to swing low from January 18 to COVID. We've got the bear market. And then basically, we want to just look at these fibs and see how the stock adheres to these particular zones. So if we just kind of glanced at this quickly, we see that we got obviously good rejection right here. It's been a helpful top. It was a top here, was like a perfect bottom there. And then it marked the top through this particular extension. So This particular set of fibs is taken even further back, and you have another extension at 1500. But if we were kind of looking at this fib right here, and we kind of say from 1000 to 522, that's quite a large range. A more recent fib might be able to give us some sort of other support in that range. So you don't want to think that you've got to draw more fibs to force a support zone, but when you've got a range which is kind of larger than 50% or right around 50%, then you probably have a fib that you can draw from a swing high to swing low that will come up in this zone and offer some more support or resistance. And again, we want to use that with confluence. So the major fib is one that's in that zone right there, and then the more recent fib as well. So at times, the fibs that you draw from a long time ago, when you get to these extensions, the more recent fibs can be helpful because they can give some other support zones in this sort of area. You just want to be a little bit careful that you don't have so many on the chart that they aren't helpful. They become sort of analysis, sort of paralysis. And that's why we also want to combine everything together and try to find confluence rather than, solely trading on the fibs or we want to combine everything for a proper analysis. And if the fibs can be helpful, then that's great. Yeah. So these fibs work. They're not perfect, but as we kind of saw with APP, if anything, we just don't want to buy when we're right under a particular fib. It's just not a good risk to reward scenario area. And I think the more of these we draw and look at on the charts, we can see that although they're not perfect, they can help when you combine them with some other tools, consider market structure, and consider things like that. So if you're maintaining good market structure and you start closing above a fib, then that you have a higher probability that we're going to continue to go higher. If we are making good market structure, but we're approaching a fib level, then you might want to be cautious in this range. Your risk to reward is not ideal buying right underneath a particular fib zone. We can kind of see with a more volatile stock that we've kind of looked at recently, Wolf. And this stock is very volatile. If we kind of look between these fibs, we're looking at over 30% swing. So as we're approaching this fib, obviously we rejected 3 weeks in a row, closed 1 week above, and then closed below. We generally, you don't want to keep adding. You obviously never want to buy as we're approaching resistance. This is a good example to just show why, because some of these retraces that happen, although this is, more of a volatile stock, we've pulled back 30% and we're still, healthy in terms of market structure. Again, it's a volatile stock, but just a lesson to be cautious when you're right under resistance, because these pullbacks are completely normal. And when they do pull back into a zone right here, you're at a better risk to reward zone. This week we close above this fib. Your probabilities that this zone holds up, risk to reward versus buying at all-time high near an extension, is just not good. This is a much better location on the chart than sort of buying this kind of momentum into resistance. And then when we layer in our other tools, we can see the 50-week moving averages there, and we're getting a little bit closer to the cloud. So your risk to reward is better in this particular zone. But also keep in mind when we kind of zoom out and look at this fib, it's following that pattern that we kind of touched on in the beginning of the call with APP, where we run up to this 702, 786, 886, and generally, stocks stall a little bit in this zone. We run up to the 886, got rejected. We've come back down to the 786. This is looking like it's holding up as support, but if it loses this and it comes back to the 702, we wouldn't like that pullback, but it could certainly do that and could still, be bullish. It could still be, continuing to be positive on the high time frame market structure, but it's just we just have to understand that you're going to experience that volatility certain times. This is, again, a volatile example, but over time, if we kind of just speculate that eventually we get to all-time highs, when we look back and we say, well, yeah, it retraced to the 786. Sometimes that's a good area to add. And if it retraced to the 702, add there as well. As long as our market structure on the high time frame is maintained, those are opportunities. But when they pull back 30% and another 30% in the moment, we generally feel like quite anxious, scary. But again, speculating that we get to all-time highs. Looking back, those are generally the opportunity. If we just glance, I know we're jumping around here, but Shopify was that sort of example. So we ran into this previous high right here. Okay, didn't break through the first time. That's sort of normal. We lost the 886, closed below it, flipped it to resistance. We looked like we were going to potentially maybe maintain the 786, but we had to come back down to the next fib, touched it for 1 week, and now we've sort of broken back out and we're getting kind of more bullish, closing above the 886 and then challenging this one level above. Again, it didn't break through that first time. Potentially the second time we can do that. And then that's going to make these fib extensions possible. So in hindsight, you look back and you say like, oh yeah, we got rejected the first time. We came back into this golden pocket ratio. That could have been, if we had some confluence in this zone, that looked like a good entry. Well, we came back down to the next fib. That looked like a possible support zone. And now we've broken above. But when we're in the stock week to week and we see this stuff and we've got the news and we've got the narratives, this is always more difficult to buy with all those other factors, right? Hindsight is always simpler to look on and just, it's obvious that we should buy these retraces into these particular zones. But when you're in the moment, watching things fluctuate day to day, having a 13% down week and then continuing lower, are we going to crash? And that's what's difficult sometimes. But the more kind of charts that you can look at like this and experience, sometimes when those opportunities arise in the future, you could attempt to kind of take advantage of buying retraces on stocks that are kind of bullish on the high time frame. So again, just to confirm, if we looked at the monthly chart for Shopify, we have a high, we have a higher low, higher high, higher low, and we've broken out. This sort of like now looking at this, like all these, support getting bought in this range looked like a pretty good chance to buy. And then we've sort of broken out. So Wolf, again, is volatile. But if we look at the monthly chart, we're making a high, higher low, higher high, potentially just forming a higher low. And things aren't going to get bearish on this monthly chart until we sort of close monthly candles below that zone. So it's bullish, but even if it retraced that much lower, it wouldn't really be bearish. So there's a bit of risk involved here trying to buy these stocks that are super volatile, that have a lot of opportunity. They can retrace quite a bit and still be overall bullish. So those are just things to keep in mind with your watch list. Considering an entry on a stock like this, you've got to be okay with volatility. It goes both ways. If you want 50% months, then just be prepared for retraces in that amount as well. Okay. So maybe for the last little while, let's just do a little bit more work. Let's just choose another stock and run through that exercise again. Why not? Just to wrap up today's call, unless there was other specific questions, just let me know or throw it in the chat. Why don't we just try that again?
Can I have you look at a stock?
Yeah. Oh, perfect. That's better. Yeah.
So it's called HUT, H-U-T.
Okay.
HUT 8 Corp.
Yeah. So that's a Bitcoin or a data center stock. So yeah, so this one is going to be really volatile as well. And it's looking like it's starting to get into a better zone. So I've charted this before. I think there's a Gann square and some fibs up there. Oh, okay. Maybe I have this listed as something. Okay, so that Gann square is expired. Okay. Yeah, I thought I had this chart listed. This was one of the data centers or Bitcoin mining stocks. So again, similar to the wolf example, this is a volatile stock. We've hit resistance potentially here, and I think we're getting closer to some levels. So big breakout into potentially some resistance. Maybe we can find a few fibs there. We lose the conversion line. We lose the baseline this week. And now we've turned that baseline into resistance this week. So indications like we've lost a little bit of momentum, we've lost a little bit of trend on the weekly chart, opens the door for potentially lower, potentially consolidating a little bit more sideways. And that would be quite okay and completely healthy after, a huge breakout. We've got some of these weeks that are like 40%. So the risk to reward is always just going to be better when we get closer to this particular zone. So we'll have to see, maybe we can draw some fibs to see if there's any sort of support or confluence of resistance. But that's just like general. If we just look at the Ichimoku Cloud and the moving averages, big breakout into some resistance, losing momentum on these indicators, maybe it's in store for a deeper pullback consolidation. You're always going to be better buying closer to the cloud, closer to the moving averages. Now, sometimes with stocks, lower is never a guarantee. So it's just not as totally simple as that. We can see that in the past, this stock has come back to the baseline, and that was all it needed for continuation. It never got back to the 50-week moving average. It never touched the cloud. If we were sort of anticipating that in these higher lows, then you would have sort of missed out. Something to keep in mind. And it's why sometimes entering here could be good to consider your entries and sort of consider them with maybe staggering them in, or kind of slowly accumulating, trying to buy this baseline with the anticipation that if it goes lower, you would maybe add to your position. So that's sometimes a consideration with these stocks that have been so bullish. You maybe want to try to buy support, but understand that lower is never a guarantee. So if you do enter, you can maybe enter at a smaller price with the anticipation that you can add more later, or you can add more if lower support levels do sort of get hit. So just first glance, again, we don't want to buy up here. This is starting to look like a better zone, and it hasn't touched the cloud for a while. So not to say it will get there, but if it does, that's the better sort of risk to reward zone. So if we kind of put some fibs on here, we can see we've got prior highs right here that we are actually getting close to right now. So previous high flipping to support, that's always a decent sign of potential support. Previous highs flipping to support, we kind of in that zone at the moment. So that's helpful. The 50-week is coming up. Let's try to put on potentially a fib for this one, swing high to swing low. So we'll get that fib extension that we just kind of drew as the one level at 82. And yeah, so if we kind of did our discussion with just this major fib on log scale, we can see that as we approach 702, 786, 886, rejected, right? Rejected at this level, needed to come back to this level, rejected at the 886, came back to the 786. That's sort of what TeraWolf is doing at the moment. And then we've broken above, and there was some other things in this area where we thought we were going to continue higher, but we didn't. We've come back down to this previous sort of high. So it's looking like this is your nearest support zone, right where we were last week, $82. Just based on fibs, if we start closing weekly candles below that, then that opens the door for coming back down to the $68. But this is where, when you layer in the other tools, we've got the 50-week moving average, which will be support possibly, and we've got the cloud in the future. So yeah, this is where, we want to, if you want to enter a position, we're sort of at support here, but we're below the baseline. We've lost some momentum. If we hold here, we can, but if we don't, then lower is possible. And if we dropped even lower, again, it wouldn't be bearish on this chart. It would just be a really deeper pullback. So that is sort of the analysis for HUT. If we lose kind of 82, 85, it opens the door for potentially lower, where the risk to reward would be better and it would be more bullish. We're making higher highs, we're making higher lows, deeper retraces, although they're really painful if we're in the stock, are generally the better opportunities.
Yes. So good to hear how your mindset approaches each stock, right? No matter where it is. I know whenever I see everything I'm looking at right now seems to be a lot kind of overextended, and then I shy away. But when I see something like this, it's intriguing, but it's still extended, right? I mean, it's in a pullback, but it's still really high above that cloud.
Yeah, exactly. There's no automatic getting back to the cloud. It's just the risk reward does get better there. It's still extended. It's really volatile. That's just where I think you have to anticipate that might happen and have a plan for entry or managing your position if it does. You could, depending on your trading avatar, you could potentially, buy this level. And if we lose it, then maybe you get out if you don't want to retrace lower and you're not willing to add lower as well. So that could be, the other kind of plan for your avatar. If you start flipping 82, 85 to resistance on a week by week basis, then that's your invalidation and maybe you get out if you're kind of trading more. The momentum strategy, the main kind of avatar would be one that would say, this stock is bullish long-term, it's volatile. If I want to build a position over time, I'd like to, enter maybe here, enter on the next support zones lower and just build this position up over time before we sort of break out and so on. So that's kind of how the momentum trader would do this.
Okay.
And not to speculate that we're going to hit these extensions, but similar to how we kind of looked at shop and net, in the moment, it feels like we terribly don't want to lose this level if we buy. But, and again, not advice or financial advice or thing, but, if we lose this and we come down to the next zone, that's going to be an opportunity. And it should be viewed like that. Although if it's difficult, if you buy here and it goes down,
right. The probability that we're going to lose both levels is probably pretty low, I would think.
Yeah. It's higher. We're making higher highs, we're making higher lows. If we lose this and we lose this, then that could be when we're really not going to get bearish on the weekly chart. Technically, is if you lose, this low here. If we look at the monthly, things aren't really going to get bearish until we, if we call this zone a high, so much lower. So that's the only difficult part with buying some of these stocks that have been bullish and have been breaking out, is that when these retraces come, they can come deep and the stock can still be very bullish overall. Yeah, but they could stall here and then continue higher. So it's just something to think about. You certainly wouldn't want to, generally, unless you want to be exposed to a lot of volatility in your portfolio, don't want to have too many of these type of positions where you've been so bullish on the monthly and then the opportunity to fall back is quite high. If you were exposed to a lot of stocks like that, then you just have to be okay with that volatility.
Excellent.
Yeah, but this is where you could plan an entry here, you can plan an entry at the next fib, and you can plan an entry here. You don't want large entries, but that could be something to consider. And again, as we look back on this, generally those are good plans and good entries. But yeah, it's a volatile stock. So hopefully this gives you a better way to think about pullbacks. Don't judge a pullback just by how far price has fallen. Start with the market structure, look at where support is, and then watch for some confirmation that the trend has actually changed. And if you want to join us for these Q&A calls, you can join the Stock Trading for Beginners group on School. You can find a link below this video. You can also post your charts there and you can get feedback as well. So thanks so much for watching, and I will see you in the next one.